India's tax collection just jumped 23%. And what does it means to every citizen of India? Good day everyone, welcome to the video of the day. India just collected 8 lakh crore in tax. And what does it reveal? A few weeks ago, we covered how India's inflation just broke past the RBI's target. Today, a completely different number just came out. And it tells a much more optimistic story about the same economy. India's net direct tax collection just jumped 23% this year. Let's break down what that actually means and why both of these stories can be true at once. So, we will start about the data, saying that tax collection data isn't just an accounting update. It's one of the most direct signals of how much money business and individuals are actually earning. So when this number jumps sharply, it's worth understanding exactly where that growth is coming from. The headline number is the first part of the discussion. As of August 10, India's net direct tax collection reached 8 lakh crore for the current financial year, up by 23% compared to 6 lakh crore collected during the same period last year. Gross direct tax collection before refunds are subtracted and came in even higher at 9 lakh crore at 19.75% increase. The reason net collection grew faster than gross collection is actually a good sign. Refunds only grew at 3.8% year on year, which means the government is keeping a larger share of what it actually taking in. Now, where the growth is actually coming from, we will break down by category and not a, getting a clear picture. Non-corporate tax collection, which mainly means personal income tax paid by individuals, jumped by 23% to 5.7 lakh crore. And net corporate tax paid by business grew at slightly slower but still strong at 19.83%, reaching at 2.7 lakh crore. The most eye-catching number, though, is securities transaction tax, the tax collected on stock market trades, that jumped 51% year on year. That's a massive increase and it reflects a lot more trading activity happening in Indian stock market this year, something we have actually touched on it earlier videos about Indian stock movements. So this isn't one single source driving the number. It's stronger personal incomes, stronger corporate profits, and a much more active stock market all contributing at once. Now, we will be reconciling this with the inflation story in our past videos. Here's the part that connects back to our earlier video. If inflation just crossed RBI target and rural households are feeling real price pressure, how can tax collection a sign of rising income? Be it growing faster at the same time? But the honest answer is that both can be true because they are measuring different parts of economy. Rising inflation particularly hurts lower income and household, where a bigger share of spending goes towards food and fuel. Meanwhile, personal income tax in India is overwhelmingly paid by smaller, higher earning segment, and corporate tax reflect business profitability, which doesn't move in the lockstep with retail price. It's two different slices of same economy moving at different speeds. How this means for every financial advisor, analyst, or investors of Indian citizens. The government has budgeted to collect 26.97 lakh crore in direct tax for the full financial year, a 15% increase over last year's total. Based on this early pace, current collections are actually running ahead of the budgeted growth. This generally is seen as a positive signal for government finance and potentially giving policymakers more room for spending or fiscal flexibility later in this year. That said, the tax collection data is strongest earlier in the fiscal year and can shift the months, especially if RBI doesn't end up raising the interest rate as a response to inflation, which could slow down both consumer spending and the corporate earnings later in the year. What is a bigger picture? Here's how the two stories actually fit together. Inflation is squeezing household, particularly in rural India, while at the same time personal incomes at the higher end, corporate profits and stock market activity are all growing strongly enough to push the tax collection by 23%. Same economy, two very different signals, both worth watching heading into the rest of the year. To conclude, a very good news for India, and we will be tracking both of these threads, inflation and tax collection, because together they tell a much more complete story about India's economy than either number does alone. If this helped connect the dot, hit the button of subscribe. Make sure to like the video, share it with your friends, family, colleagues too. Welcome to Money Brief. Let's grow together.